Hello ladies and gentlemen, welcome to my channel. My name is George Kingori, your online finance guy who speaks about all things finance. I can be able to save, invest and grow in your financial journey. And today I'm going to speak about how to invest during a time of high inflation. Time of high inflation is when the general prices of goods and services are actually going up. So what do you do? The first thing that you can be able to do is invest in real estate assets, land, property, and other kind of real estate investments. Yes, invest in property, in land, in assets that you can be able to touch and to hold, that are actually going to hold value even in a time of inflation. And remember, when the general prices of goods and services goes up, your value also goes up with that, and still, because it is increasing, because land will never be manufactured. There is no new land that is actually manufactured, and so the price of land, whether in inflation or without inflation, still goes up. And so even in a time of inflation, you are much more protected when you have your investments in land. So that is one of the options you can be able to pursue in a time of inflation. The other thing that is connected with real estate is Reits. Yes, Reits are kind of like shares of organizations or companies that have invested in real estate. Yes, REITs are like shares of real estate companies that are actually traded in the stock market. Yes, that is one of the easiest way to actually gain value, because the asset that is attached to this particular company organization is attached to a real estate asset and investment. And because real estate, as we had mentioned, go up over time and protected, and during a time of inflation, even REITs do very well at a time of burgeoning inflation. Of course, the other thing is shares, not just any share, but shares of companies with goods or services that are less than proportionate in terms of price sensitivity. Yes, if the general price of the goods or services that this company is offering will not be as affected or as sensitive, it is less sensitive than others, those are the kind of investments, shares in those companies that you should invest in. If it is a kind of good that once inflation goes up and the money that people have becomes of less value, people are less likely going to invest in it, don't buy. For example, things to do with salt. Even if you double the price of salt today, people will still buy salt, because over and above the cost of salt being low, even a significant increase of 100% will still make the price, it's pricier, but it is still low enough. But also because there is no alternative to salt, shares of these companies of salt will always gain value, because their commodities are not affected even when people's general income and the ability of the income to meet their needs is depreciated. So shares of companies that are less sensitive to prices. So even if the inflation or the prices of these goods goes up, the demand will fairly be unaffected. So those are the shares that you buy. Don't just buy shares of companies that offer luxury goods like designer clothes or designer shoes. Don't invest in such, because when people are not doing well financially and inflation is affecting them, they tend to buy less of these commodities and buy the ones that are actually meeting their utility without the additional glam and glitz. So buy companies that are going to be less price sensitive during inflation. The other thing is you could be able to buy cryptocurrencies. Yes, cryptocurrencies, even though cryptocurrencies have not yet gained as much traction as other forms of investments, you could be able to store your money there, because when real money is going down in value, the Bitcoin and other cryptocurrencies are not affected by this change. This is because it acts like a kind of a store of value and a digital asset. So ensure that during this time of hyperinflation, you can be able to keep your money in Bitcoin or any other cryptocurrency which may not be affected directly as the money that you actually hold. Of course, the other thing is to invest in gold and other precious metals and minerals. Yes, gold has been seen to hold value even during the depression or the Great Depression of the 1990s, the 1900s, during the world war, between the world wars. The price of gold was able to hold consistently and has been growing over the years. The price of silver has also been seen to hold on significantly. The price of other precious metals like platinum has also been seen to hold value significantly well compared to currencies. So invest in gold and other precious metals. Diamonds also, although diamonds can also be seen to be, the only reason they hold value is control of the supply and demand, or the supply of these diamonds in the open market, because they are controlled by few companies are able to supply diamonds in the diamond market around the world. So I would not suggest diamonds, but gold, silver, platinum is a good or a better bet as regards to holding value of your investments. Of course, the other thing that you can be able to invest in is commodities. If you can be able to buy food commodities that can last a long time and buy in bulk when they are in high supply and be able to store effectively for a longer period of time, the value now plus the value in the future will be able to grow as you go. So if a kilogram, say, of beans was $1, a kilogram of beans, in the next 10 years it will probably come close to $2, because the value of these food commodities will actually grow over time. The question has always been, can you be able to keep this food non-perishable for the 10 years? So if you can be able to store food effectively, and if you have the stores and the capacity to be able to keep it fresh, then you can be able to use your money and put your money there, because it's going to hold value, and even as you sell in the future, it will be at much better value. The worst thing you can be able to do during an inflation is to keep all your money in cash, all your money at the bank. That is the worst form of thing you can be able to do. And as a bonus, you can also be able to take advantage of inflation to be able to make money by taking loans. Yes, you can be able to take loans, especially where the inflation rate is higher than the interest rate, or the inflation rate is significantly closer to the interest rate times, because you can take the loan, invest in the commodities that I have talked about, then repay the loan at a future period when the money will be of less value. Because inflation, if inflation surpasses the interest rate, then taking loans now to be able to buy real assets today so that you can be able to sell off in the future will always give you a return, a bonus, just because you have followed me up to the end. Remember to be able to get these tips and much more, subscribe to the channel, leave a comment down in the comment section, and like this video. Thank you and enjoy your day.